Welcome back to the channel, guys. My name is Gordon. We are back with another video. Today we're diving in, taking a look at a market update. We just had a rate cut a couple days ago. Let's break it down. Let's see what's happening. Remember, as always, if you enjoy the content, please make sure to smash that thumbs up button below, hit subscribe, hit the bell notification icon, make sure to grab your free copy of The Rise of Bitcoin, and let's get into it. Okay, so jumping into it straight away, Bitcoin currently priced at 108,000 US dollars. We are seeing a little bit of a dip below the 200-day simple moving average at this moment in time, Thursday, October 30th, at the time of recording here. And yes, we did just have a rate cut on Wednesday with prices pulling back here in the immediate aftermath. So we did see a little bit of a run up in price for Bitcoin here, going from 107 on the 22nd of October all the way up to 116. Maybe that was us kind of pricing in the rate cut. We've given all of that back pretty much as we've dropped below $109,000, $108,000 again. And we're seeing the markets digesting everything that happened with that FOMC meeting. So the rate cut was one thing. We got a 0.25% rate cut, but Jerome Powell was also discussing the fact that we would see an end to quantitative tightening by the 1st of December. But I think the other thing that's leading a little bit of this pullback in the immediate aftermath here is also the fact that he said the rate cut in December is not a foregone conclusion. And I think you're seeing the market digesting that and maybe kind of battling with bears and bulls here to see which direction we're going to move in. Now, we have seen this before with similar types of price action. Even going back to September, we did have a drawdown in the immediate aftermath of that most recent rate cut in September. On the 18th of September, we can see from the 18th through to the 25th, that immediate week after, we had a full drawdown for 7 days before we got a really solid bounce. That solid bounce actually led us to moving into new all-time highs for Bitcoin, up above $126,000. So the structure that I'm seeing here is not uncommon. And again, we have to see if we're going to get a bounce. We have to see if we're going to get back up above the 200-day simple moving average. If we zoom out to the weekly as well, we have to see if we're going to get Bitcoin getting back up above and closing above the 20-week exponential moving average, where we closed above it last week. We're broke below it again this week. So again, a few more days to see what ultimately happens with the close of the weekly candle. Maybe we have to come down and retest the 50-week EMA. Not necessarily necessary to happen, but again, as the market digests this most recent piece of news, we are seeing a little bit of volatility happening with Bitcoin and obviously across the board as well. So if we look over here to the rate cut target rate for December now, which is the final FOMC meeting of this 2025 calendar year, we're looking at a 27% chance that we keep the same current rate, which just got dropped yesterday, as we know. So the new current rate is 375 to 400, and a 72% chance that we get a further rate cut. So still a very high probability that we get a rate cut in December, but this number was even higher prior to yesterday's FOMC. So again, are we going to see that rate cut odds change here over the next few months? I think we will. It's always going to fluctuate, but what happens in markets, what's happening with the government shutdown, what's going to happen when we reopen? The Treasury General account is also increasing. That's going to draw down further with more liquidity coming into the markets after the US government shutdown, after they get back into working business. So we have to wait and see what happens. I do think it's very possible we get another rate cut by the end of the year and that we see that begin to get priced in here. Even if we zoom into a 4-hour, what I'm looking at here is for Bitcoin to maintain this structure of putting in these higher lows. Now we're testing that right as we speak here, where we had these lows from the 17th, higher low getting put in. You know, you can argue we're retesting this exact level of support right now, so we need to see what happens. I'd prefer to see that structure not break and for us to move back up to try reclaim the 200-day simple moving average, and then on a more macro level, getting back up above that 20-week EMA that we discussed. But we are coming down to retest these previous highs from all the way back in December of 2024. If I draw a simple trend line in here, we can see this is the area that held right when we had this drawdown in the middle of October before that rally into the FOMC meeting. So not looking to overcomplicate things. Obviously, these previous highs acting as a very strong level of support now that we have Bitcoin retesting this area. And what I'm looking for is us to hold this area, get a bounce, and start moving back towards the upside. So lots of things happening. Again, across the board, we're seeing red in the immediate aftermath of the FOMC meeting. If we look at Ethereum on the daily, we're looking at prices around 37.50 right now. On the weekly, again, this breakout and retest structure is still holding. We have to wait a few more days to see what's going to happen with the close of Ethereum here. I want to see us maintaining closure above that 39.70 area. And then having the ability for us to see Ethereum get a little bit of a bounce, hopefully, as we move into November and December. But that may not happen. We might have to draw down to retest the 200-day. We might have to see things coming a little bit lower before they go higher. And if we look at total crypto market cap, we're back around 3.6 trillion. We're retesting that 200-day simple moving average again, zooming into the daily. This area has been holding nicely as support for the past number of months. Again, support here very simply drawn in, a key level here around that kind of $3.57 trillion area has held a support here going all the way back to July of 2025. It lines up pretty nicely with these previous highs from back in January. And so I'm looking for us to try and maintain this level and then squeeze to the upside when we get a little bit more momentum for Bitcoin. Total 3, everything excluding Bitcoin and Ethereum, also getting pretty close to that 200-day simple moving average. So too is the total 2 chart. Not quite as close though. We're seeing it at 1.44 trillion. Again, are we putting in a bit of a head and shoulders here where we have to come down and retest this area before moving higher? It's very, very possible. With the immediate action here in the aftermath of the FOMC, we're also seeing Bitcoin dominance being a little bit choppy. We saw a drawdown yesterday from 60% to 59.5. We're shooting back up today with everything else bleeding out more versus Bitcoin. So again, I do think we have to see this move a little bit higher before it comes lower. But my big scenario here is a further breakdown in Bitcoin dominance before we get a cycle peak down into this 45-ish% area as alts outperform. That's not going to happen just yet in the immediate term. We might need to see a little bit more consolidation. If we jump over here to take a look at a couple other very quick charts, total 2 divided by Bitcoin, again, zooming out here to a weekly, we did have this breakout happen a few weeks ago in August of this long-term downtrend. We're having a pullback and consolidation here, but I do think this chart goes higher, similar to what we saw in 2021 and 2017 respectively. We haven't seen that larger move for total 2 versus Bitcoin just yet. And others versus Bitcoin is also another key chart here. We're at the very bottom of this megaphone pattern here at similar levels to where we were all the way back in September 2019, even going as far back as March 2017. We retested this area in January 21 before we had alt season in the last cycle. And so looking to see, can we hold support here? Again, we might have to drift sideways in this area before we get a true bounce and move to the upside. But I do think there's more room for upside on this particular chart. So that's what I'm looking at across the board here. Yes, it's been a little bit volatile and a little bit painful to digest what's been happening here with Bitcoin in the immediate aftermath of the FOMC meeting, but Bitcoin is not operating alone here. We did see a pullback in equities. The S&P has pulled back a couple of percentage points here in the immediate aftermath of the FOMC rate cut yesterday as well. And gold is getting a little bit of a bounce after a pullback. We have talked about on the channel here that gold versus Bitcoin relationship. And if I bring that up on the chart here very, very quickly, we can add the price of BTC in a new pane. And what you can see typically is when gold actually begins to consolidate after a run up, that is when Bitcoin typically gets to make a larger move to the upside. And so you can see the last time gold had a run up, it started to consolidate here in April and May. And that April-May period is when Bitcoin made a larger parabolic move. So given that we've had a parabolic move for gold, it's pulling back and possibly beginning to consolidate. Maybe that's going to give us permission to see Bitcoin moving higher in a more parabolic fashion into November, December. Again, speculation, guys. Nothing here is financial advice. always do your own research, check out the fundamentals, check out the technicals, and make sure you're staying on top of everything happening in the market. That is it for today's video, guys. As always, if you enjoyed the content, please make sure to smash that thumbs up button below. Let's do it right now. Under my finger, there is a thumbs up button. Make sure to smash it. Do it. It just takes 3 seconds. Make sure to subscribe, hit that bell notification icon, and you've got a free copy of The Rise of Bitcoin waiting for you in the description. Grab that below, and we'll catch you in the next one.